Hey guys, thanks for joining today. Nate Dodson from Crowdfunding Lawyers, and today is actually one of the most important, I would say, educational workshops that you could ever be at. So I hope you're here live. If you are, please add any questions that you have to the chat. Happy to answer, go through whatever rabbit holes you may have. And if you're watching this afterwards, please still add your question in the chat. We'll come back. We'll circle around with you, add any comments or additional information. We definitely want to make sure that you get all of the info humanly possible, because we're talking about scams, shady investment deals. And a lot of this, it affects the investors. However, where there's the bigger effect is really with you, the sponsor, the issuer, the guys that are putting together the deals, looking for the investors, raising the capital. That's generally who we work with. And so I'm going to share some of the scams that are out there, give you real live examples of ones that I've known, ones that I've almost gotten caught into for one reason or another. And so that you understand, prison is real, and it does happen. I know we'll do this song and dance as attorneys. Oh my God, if you don't do anything right, your life is over. The reality is, as long as you're trying to do good, you're trying to take the right steps, you're trying to protect and take care of your investors, in general, maybe there's a fine. Maybe there's a cease and desist. Maybe you have to offer to the investors to send them their money back. But what I'm going to talk about today and what I'm going to cover today will send you to prison. And I've got some great stories to share. I don't know if you've known this, but I actually have talked to the SEC, the FBI, an unknown number of times. Reason being, hey, I was a practicing attorney, cutting my teeth, learning how to do deals, learning how to put together real estate syndications, some business startups. Let's talk about some acquisitions or developments in the mecca of scams, Las Vegas. So for better or worse, I had the horrible opportunity to have seen way too much, to have my partners, my clients get into these situations. Some people that don't listen go to prison. But I'm going to really dive into why and how this has actually occurred. To start with, I'm calling it the operator, not issuer. One of the biggest things for you to watch out for are the promoters. Hey, raise some capital. You're going to make so much money. Your investors are going to make so much money. This is the best deal since sliced bread. Oh my God. Yeah, fantastic. However, I don't want to deal with the investors. I don't want to be the issuer. I don't even want having communications with the investors. I want you to do it all. And anybody that has been in this industry doing private deals for any length of time, you know who I'm talking about. You've seen it and you've dealt with it. Here is a true story, hiding the identities. I'm even going to change the industry to protect the innocent and protect the guilty. They will get theirs. It's not my place in the world. But we've got this operator. And we'll just say that they are a great operator that's opening up 7-Elevens. That's really not the case. But Oh my God, I have run the 7-Eleven so amazingly wonderful that you would be crazy if you did not hire me, connect with me, raise capital to fund me opening more locations. There's actually a very similar deal to that happening, and it's kind of collapsing right now with ATMs and an ATM promoter here in the Dallas area. They may go to prison at the end of the day because they were actually soliciting funds directly. But a big part of their strategy was exactly this. Oh my God, I'm amazing. I have such a great track record. I know what I'm doing, but I can't really prove it. I can show you these pro forma numbers. I can show you this analysis that's going to show that you're going to make gazillions of dollars. Your investors are going to be making 30% annualized returns. Yeah, it's just not real. But the setup, the way it always looks, is the service company, the operator, the guy that's saying, all I need is the money. And you know what? You raise the capital, you work with the investors, and it shouldn't be me. I don't want it to be me. What inevitably happens is they will rope some people into start a fund, find your own investors, do one of these fund-to-fund strategies. If you don't know what a fund-to-fund strategy is, you've got one company that is trying to accomplish something, and then they convince other promoters or fund managers to raise capital into their own deal to invest into another. It's actually a very legitimate structure and a legitimate strategy. It all really comes down to, is the guy that's going to ultimately get the money scrupulous, trustworthy? Does he have a proven track record? Not just himself. Does he have a proven track record managing investor funds? And if that service company says, oh, no, we have all this experience, we are the best in the business at exactly what we're due, but we haven't worked with investors before, there's a key for you to really hone in on, because what they're really saying is, well, this is a brand new thing, and we don't want to give you any indication of what you should expect for yourself, what you should expect for your investors. And now, inevitably, I'm opening up these 7-Elevens, and I go to you, and I say, hey, I've been doing great at this. I've actually been making 200% annualized returns. Usually it's actually around 35 to 50%. Those are important numbers to remember, because you're going to make an amazing return just for raising the capital, just for dealing with the investors. You're probably going to be able to take 10%, 15%, up to 20% of the return yourself. And all you have to do is raise the money, deal with the investors. And then the investors, they're going to get 20% returns, 25% returns, 30% returns. That's what these service operators that really don't want to have anything to do with the investors, well, they don't want to have anything to do with the investors because they're ready to scam. They're ready to take those funds. They don't care what ultimately happens to the deal. They will, in fact, open up those 7-Elevens. They have to, because that's their risk. Whether they report back, this is what's going on with your investment. Whether they even report back, this is how I've used the funds. That often doesn't happen. It can start to look like a black hole. They want to do enough that if you ever sue, they can rightfully say, I did this. This was my contractual obligation. Oh my God, look at this 2-page agreement that this is exactly what I was going to do for you. And they will oftentimes win. I hate to say it. They have a contract not to solicit investors. They have a contract to provide some service. It is generally a very loosey-goosey type contract. It's a service company. It's not an investment issuer. Similar, another just shady deal. And very similar to this, a service company. These were actually some clients that I won't name names, but this is the exact true story of how these guys basically scammed investors. And today, the main guys are spending 80 years to life in prison. And at their age, it will be life in prison. Originally, they were my clients. Originally, they came to me and said, hey, we're trying to set up this service business. I'm hoping that you will write me a legal opinion that says that we're actually not offering securities. I look at what their plan is, and frankly, what their pitch to the investors was that, hey, pay us for us to do this regulatory process to get you these wavelength bands. And because you will have it, AT&T, T-Mobile, all of these huge cellular companies, they're going to pay you ridiculous sums of money to lease this bandwidth. Sounded good. Pitch to the investors, to the service buyers. You're going to be making 30 to 50% every year from these leases. It's a no-brainer to move forward. You can either invest yourself or, better yet, why don't you put together a fund, raise the capital, use us to do all of this work, and this is what our fee is going to be. Same setup. We have the service company that is not soliciting for investor funds. We have an investment vehicle from third parties that are raising the capital. Ultimately, all of that money is getting to the service company. For at least these guys, they had experience to be able to talk about what they were doing, how they were going to make all this happen, and it sounded so good. And the reason why I can share this with you, and I ended up getting called as a witness. What happened, and this is really important for you to know as well, I had to testify. Kind of key witness for these guys to go to prison. But they tried to engage for my law firm services, to do this legal opinion, to say that whatever they're doing was legal. It was not selling an investment. They didn't have to pay attention to securities regulations. I sent back a very pointed communication showing that, no, you are selling a security. It's an investment contract. You may not call it a fund. You may not call it a syndication, but ultimately you are offering the same investment contract to each and every potential client with the pitch that hire us for this amount. We're going to do these things. And I believe you're going to get an amazing return. I'm not going to promise anything, just like never promise anything with an investment. Now, I, of course, declined. I actually never talked to them or heard from them again until all this blew up. They found another attorney, less experienced, didn't actually even practice securities, but they convinced them to give them a legal opinion that said what they were doing was not selling securities. And you know what? They moved forward. They sold clients. Actually, it was around $16 million of clients that they brought in to do this regulatory process to get them their bandwidth. And then the SEC goes calling. Turns out they had actually pocketed $10 million, give or take, between the two principals. And then, of course, other people get other amounts because they got to keep the engine rolling. And then when the SEC started, first, and this is how it happens, there's a subpoena that comes out, or a nicer letter that firmly states, we want to interview you. And so these guys started down this process. And ultimately, they said, oh, it's a security? It's an investment? We had no idea. We were relying on this other attorney's legal opinion that said that we weren't selling a security. SEC says, well, great. We still want all of your communications. And by the way, now you're using, this is a defensive counsel. My attorney said it was okay, so I went ahead and did it. That's actually a defense, but it also waives attorney-client confidentiality. And that's why I can share this true story with you today. They got a hold of all of the emails from the email server that ever were communicated with these guys about this scam. It included my communications. And I got to be honest, especially being in Las Vegas, it probably happened a dozen times. FBI, SEC, they get my communications. They know that we're always doing things right. We're never helping anybody run a scam. And frankly, if we see a scam and they're not our clients, I'm the first guy to start screaming and yelling, this is a scam. Somebody needs to look into this. So had to have a really good relationship with the FBI and the SEC. So they call me up, hey, we saw your communications. We need you to testify. Great, no problem. I am always there for you, Mr. SEC. And at the end of this trial, the principals got their 80 years to life. We'll never hear from them again. They tried to throw me under the bus with this legal opinion type strategy. And at the end of the day, so goes the rest of their life. That's one true, real example of how this scam gets run. The other examples that I just gave, a little bit different spins to it. Same, you're going to lose your investors' money. They're true. I just changed the facts to protect the guilty. So we've got a question from Daniel. Thank you so much for throwing it down there. And if anybody else has any questions or rabbit holes, love to talk about. And this is really, it's such an engaging topic for me because I've seen so many of these shady deals happening over the years. And as an attorney, we've got to do this. We call it a noisy withdrawal. Don't do this. Don't move forward. Pretty please. Don't put you or your investors at risk. But if you want to, good luck. We're out of here. And we will do that every time that we see one of our clients getting into one of these. Daniel's question, will Elon Musk get rid of the SEC too? Any thoughts? Actually, just today, there was a news article saying that the next targets of the Doge department or whatever it is going after to reduce the regional SEC enforcement and regulatory arena. Gonna get in there and start firing people again. What does that really mean to you if you are working with investors, bringing in investors? There's gonna be way less people actually doing the investigations. There's going to be more of these scams that are going to fall through the cracks. Scammers that are going to win. It's horrible for our industry. It is what it is. I know that there's always been a lot of investigations into Elon's transactions. He has a personal grudge. So, Daniel, I would say that the SEC is not going to disappear, but it absolutely will shrink down. And what's going to shrink down are the divisions, departments, whether they're regional or in Washington, D.C., that is focused on enforcement of the rules, investigations of the rules. And so if you are shady out there, you may have a better chance of avoiding an investigation. Just don't call us. And I hope you never work with any of our attorneys or my law firms. But there are actually major changes happening at the SEC. They're happening with the environmental regulations. With now, you don't have to disclose the environmental risks that you're posing because of your oil and gas drilling or anything else. That's a momentous shift from, hey, let us know if you're destroying the environment. Now, you don't need to worry about that anymore. Crypto. Of course, now there's a very crypto-friendly administration. That's going to make a big difference. We, crowdfunding lawyers, will do quite a few Regulation A offerings. Probably on par with the guys that are doing more than anybody else in America. This is just a lot of what we do, and it's a great platform. You can set up a fund to raise up to $75 million from absolutely everybody. You can advertise online. You can do your webinars, seminars, email blasts. It's a great platform to have. Again, with this shrinking of the SEC, there's going to be less investigations into them. I actually think that it's going to continue to be a great platform to use. But also with a lot of these, we've done these deals where they're crypto, either crypto investments. We're going to buy crypto. We're going to mine or trade crypto. And traditionally, the SEC has absolutely hated crypto. Now that is very much changing. So we will see, things are still coming together, how much the SEC will change in terms of their approach to cryptocurrency and tokens. What it doesn't change, and this is what I need to make sure that you understand, is if you are issuing crypto, there are either utility tokens, meaning you can actually use them for something. Bitcoin is considered cash, and you can buy and sell cash anywhere at any time. But if you are issuing tokens that you're going to get this great return based on these hard assets that I'm going to acquire, this real estate that I'm going to acquire, these private companies that I'm going to invest these funds in. And we've had so many people try to accomplish the same thing. And they say, no, it's crypto. It's not a security. And then we've got to explain to them, sorry, no, it's completely a security. You got to pay attention to these rules. I understand there's a whole different market with crypto and blockchain tokens and whatnot, but we still have to go through the process. Another question, start where you can. I'm looking to do an intrastate offering in South Carolina. If it falls under a state exemption, do I still look at the Howey test? And just to be clear what the Howey test is, it's been the very traditional test of, do investment securities rules apply? Is there a pooling of passive investor funds that are looking to make profits from the efforts of others? Just to touch on a few of these, well, an investment isn't always a security. You can buy a franchise. A franchise is an investment. But now you're not relying on the efforts of others to make your profit. It's really your effort. But, starting where you can, I got to tell you, it doesn't matter if it's intrastate, interstate. There are different tests for securities, and the Howey test is the most used of a securities test. However, the second most used is the family resemblance securities test. Is this the type of deal, type of interest? Does this look and smell like it is a securities-based investment? And they'll still catch you under that. But I will tell you, those intrastate offerings, you are still going to be subject to North Carolina securities laws. And I can guarantee to you the Howey test is still going to be applicable, but state law does control. But let me give you this family resemblance, because this is actually another example of, wasn't a scam, but it was a company that figured out how to do better than the SEC. And they did for a long, long time. Life Partners. If you don't know what a life settlement is, you can go out and buy somebody's insurance policy. And when they pass away, you get the benefits. You get paid off. Let's be honest. Hey, who's going to, or what are the guarantees in life? Death and taxes. So it was great for the pitch. You know everybody's going to die. So invest into their life insurance and it's going to be great. Now, what this Life Partners, they were doing exactly this. And I'll tell you a couple other steps of how they created really just a scam process. But they were buying these life insurance policies. They were cutting them up, selling them to investors. SEC catches wind of it, and they bring a lawsuit saying, hey, you unregistered, unlicensed sales securities. Life Partners wins. And they win because of the Howey test. Because there's no efforts of others. Beyond some clerical, hey, you do have to keep paying the premium. Besides that, there's no efforts other than this guy has to die. And that's inevitably, it's going to happen at some point. So it failed the Howey test. It was not a security. The SEC lost. Huge news. Oh my God. The SEC, they couldn't do anything about it. So they tried again in a different jurisdiction. They lost. Then they tried again in a different jurisdiction. And then ultimately, you know, I'm around here in Dallas, in the East District of Texas, I think it was. It's right around here in North Texas. They brought the same lawsuit, the SEC did, and they finally won. This judge in Texas said, yeah, it may not be exactly the Howey test, but it's being pitched and sold as an investment. You are pooling together investor funds to buy the policies to make the premium payments. And just because there's not a bunch of efforts, let's be honest, there is activities happening and there's risk. Because if these life settlements run out of money, but the person, the life and being, the guy that the insurance is on does not survive or does survive, then the investment implodes and the investors lose everything. So there is now risk. This looks and smells just like a duck, quacks like a duck. So he found it to be a security, and frankly, within a matter of days, Life Partners filed for bankruptcy. Where this truly it affected tens to 100 of my clients. Investment sales guys across the country, because you know what? They were paid huge commissions. I mean, they weren't huge, 7% of capital that comes in, very attractive. They were even able to get insurance from Lloyd's of London, and I'm going to talk about that structure a little bit more, to insure the returns. Now, the SEC says, okay, now all of you that were selling the investments that were deemed to be investments were unlicensed, selling investments to the public without regard to, are they high net worth, are they not high net worth, but you were receiving commissions. There's now a class action from the bankruptcy court supported by the SEC to try to recoup all of the commissions that everybody had received across all of America. And this is another one of those point of note. Just because somebody else did a scam, because of your participation and how it worked with you, you may still be held responsible for what they did, for what you received. So everything that I'm talking about here, I don't care if you're raising the capital, managing the capital, working with the investors, being sold that, hey, it's a franchise. Hey, this is a service. Hey, this is an insurance policy. It can still come back to you. So this is why this is the single most important educational workshop for you to ever know as getting out there as a deal maker of the world. Follow-up question. If Elon will do wonders, can we vote Elon in Canada without becoming a 51st state? I've got no comment on that. There's 1,000 different ways to take it. So that is really what it comes down to with the operator, not issuer type scams. To talk about another one, Ponzi. Everybody's heard of what a Ponzi scheme is. Pyramid scheme. It originated, I think it was back in the 1800s by Charles Ponzi, hence the Ponzi scheme, where he just figured out that, oh, if I have people invest and then pay other investors a return from their investment, guess what? Those original people want to keep their investment growing at an expedited rate. They're going to refer and bring in more investors. Then those investors are going to keep bringing in new investors. Ultimately, it goes up to a pyramid where the funds flow up, but they also flow down to create the returns for investors. At some point, the pyramid crumbles because there's not enough money coming in to continue to pay the returns that are being expected. And ultimately, it will all collapse. It is a win, not if, though. Because let's be perfectly transparent. Madoff, one of the biggest Ponzi's, the biggest Ponzi scheme that has ever happened in the world. Billions of dollars were taken. This guy, it was a NASDAQ chairman or board director, Madoff. He was had his own broker dealer. FINRA had been looking into it. He was an investor and a trader. He was delivering amazingly 10% returns to all of his investors consistently over the years. What he wasn't showing is the way that he was hiding money into areas and places that there really was no more money there, using that to deliver those 10% returns, and then pocketing billions of dollars personally along the way. That is the biggest example of a Ponzi, but they are constantly happening. And I'll give you a couple more examples of those, but I will share with you one of the most hilariously funny investment offers that I've ever seen. And it was when I was living back in Las Vegas. And they were, let's see, I'm going to add a banner for this because it's great. There was a ad, big quarter-page ad in the newspaper. Are you looking to invest? Invest now in Madoff Investments. It was hilarious. And for years, I had that ad because I just saw it in the normal course in a frame on my wall. Madoff Investments. It was great. It was a couple months later, see another news article. It was from the Nevada Secretary of State saying that they've taken action against Madoff Investments. Turns out it was a big joke. It was a dentist, so just wanted to have some fun with it, bought this ad, put it out there. So there really was not a solicitation of funds, but he had to promise to never try to raise capital again still, just because of that absolutely hilarious joke. All right, let's cover actually a few more Ponzi's and what they look like and what you should be looking out for. One of them, again, I know these guys, they went to prison. I didn't represent them. In fact, their attorney went to prison with them. But this was this whole, for them, and I'll talk more about this as well, it was a diamond deal. Hey, we're buying these conflict diamonds at this deep discount. We're bringing them over to this market. They're cleaning off the conflict issues around them, and then we're able to sell them for gobs of money. We're borrowing funds from investors to make all of this happen. And if anybody's watching that I've been doing deals with for, I don't know, the last 20 years, they will know exactly who I'm talking about. But the main guy, again, he was a service guy. He didn't actually raise any capital. He didn't work with any investors. He hid behind the scenes. Turns out he was also an FBI informant, which got him out of a lot of trouble. But everybody that was raising the capital and was aware of really what was going on, there was a bring in an investor, you're going to get this amazing 20% interest rate. And when the maturity was due, these funds plus 20% were going to be made available to you. And they, in fact, showed that those funds were made available. However, Mr. Investor, why don't you even do it better? Why don't you leave your loan with us? Continue to get your 20% annual return. And so now I don't even need to give you any money. It's just this invisible, machine that's going to create this 20% per year interest return. Tell your friends, tell your clients, go raise some capital. You can take a part of that 20% interest rate for yourself. Well, pretty soon, people figured out they couldn't get their money out. The 20% interest rates was not real. The main guys that were raising capital into this, they were actually aware that there were not the funds to pay the returns, but they kept selling them as loans anyways. And then there was this attorney that was doing truly private placement memorandums, truly treating it like it was an investment, just hiding the facts, misleading the investors. And in fact, that was another big Ponzi. And in fact, they all went to prison over that as well. There was recently another Ponzi in the state of Texas with oil and gas. I do not trust oil and gas. We actually will not represent or deal with oil and gas because of those scams. But it was as simple as, they had these oil wells, they were raising capital, they were paying out other investments that were supposed to get returns through other vehicles. Ultimately, at some point, it all collapses because it was all too good to be true. And a lot of these scams, they may fall under a Ponzi. They may be one of these service company type scams. They do all end up at this too good to be true level. Always providing this amazing return to the investors. We're talking about 20%, 25%. Hey, you're going to get 35% per year. I got to tell you, you're going to make 10 times your money. Well, I hope you do. But the reality is that's too good to be true. And it always is. Yes, there are times and opportunities that are great. Massive returns and sums of money, they really do happen. But for the guys that are running around and, hey, we're going to hit this 30% return, unfortunately, it's not reasonable. But here's how they do it to make sure that the promoters, the issuers, stay out of trouble. They'll usually have a very high preferred return rate. Preferred return is like having an interest rate, but if you don't pay it, it's not like a debt that you default on. And I'm the scammer here. I will offer you a 25% preferred return. Whatever is made, I'm going to have this high preferred return. That's going to go to you first. What I'm not going to show is all of the fees that are getting built into the deal. Because I'm going to go ahead and pay myself 10, 15% of revenue for XYZ as a royalty because it just makes sense. I'm going to get mine because I'm doing the work. But don't worry, whatever profits they are going to go to you, Mr. Investor. And I'm going to sell you on it's going to be 25%, but that is too good to be true. You're never going to get it. Alternatively, hey, I got this amazing startup company. I got to tell you, it is worth $100 million. It's going to be worth $500 million. Amazing. And all I want is for you to contribute $500,000. But for that $500,000, you're probably going to make $10 to $15 million, even with only owning 1%. And anybody that really doesn't dive in deep enough to really start peeling back the layers of, are they performing? Are they growing? Or is this just another business plan on a hope and a prayer with a good sales guy convincing you that it's going to be this massive return, even though it's this itty bitty tiny piece of the business? Too good to be true. And then the last way that the scammers will hide money is by doing business with related businesses. I have seen a pretty good example of this is I knew this one group that I couldn't deal with, exited as quickly as possible as any representation. And this was before their situation imploded. But they were raising investor capital. They had some businesses that were moving forward. They had legit operations occurring. They were promising these investors a phenomenal 35% plus annualized return. And they also even disclose the related party transactions. They disclose the relationships between the fund, the company that was bringing in the investor money, and these other companies that the promoters, the issuers actually owned. Then they were peeling off money left and right into this accounting firm, into commissions for real estate acquisitions, huge percentages for contractor services. And ultimately, they had all these related parties, all these companies that they really controlled and they got the profits from, were just racking up all of the costs and fees to whatever the deal the investors came into. And of course, inevitably, that company goes belly up. Everybody loses everything. Investors are upset. And I know of one that actually there was even a lawsuit that happened because of it. Ultimately, the company won. They disclosed these affiliated companies and those transactions. They just took as much money as they could while investing into actual operations as little as possible. Ultimately, everybody lost everything except for the promoters, the guys that did the deal. And they got away with it. Nothing ever happened. That's what you have to watch out for, because what they were also doing is they were talking to you, asking you to raise capital, to find investors, to help fund these 7-Elevens that I'm getting paid to develop, I'm getting paid to construct, I'm getting paid for the accounting, but I'm doing it through other companies. You have to get granular and deep in your own due diligence. Start peeling back the layers. If somebody says, no, we're just going to use my accounting firm, okay, that can be legitimate. Let me see the services contract. I'm going to be the general contractor. Fantastic. Lots of people do it, and it's legitimate in many, many transactions. Let me see your contract. Let me see the relationship there. If something is disclosed in the PPM, you can rely on it to a certain level because it's generally summaries. Best practice would be to include those agreements in exhibits. A lot of the times people don't want to do that. But with the summary, there's always those chance to hide what's going on in the background while still meeting the legal obligations of what to actually disclose and talk about. So that is another protect yourself, and always remember, if it sounds too good to be true, it always is. And now I have one more scam that I don't think anybody's ever really shared before. I have known one guy that went to prison for 15 years being the promoter of one of these scam deals that revolved around a mine. It was very much so these life settlement investments were very similarly safely white whale. White whale is that mythical, oh my God, if I put in $1 and I can pull out 5. It's these offshore trading platforms that, no, you can't get the information about. They don't disclose it to the SEC. It's all kept under wraps in the Bahamas and Africa and wherever. Abu Dhabi. But they're making so much money. But they don't subject themselves to the jurisdiction of the United States because they are offshore, so they can lie, they can cheat, they can steal, they can falsely report what's going on, and good luck to you to actually do anything about it. This mine deal that I was talking about, you know, my client was the guys that were helping find investors. The guy that was promoting it, he had his services company. What he had done is he found a mine that had $10 billion of proven reserves. This also happens with oil and gas deals. Another reason why we will not do mine deals, we do not do oil and gas deals, because of the number of scams. That being said, there are some legitimate opportunities out there. Higher risk, higher return. We're not going to do them because of my experiences with them. So this guy, he finds this mine that has $10 billion of proven reserves. He goes out and is looking for investors to help put a down payment on the mine, which in reality, there was a purchase agreement there for this mine that the promoter was going to take. It was $3 or $4 million, but then also give to the mine owner $3 or $4 million, and that gave him the right to run the mine and get the deal done. I think the mine owner was not part of the scam, but I don't really know. I left before this all imploded. The other thing that he was raising money for was to get an insurance policy on a bond. The bond with the funding goes to the white whale platform to make more money, all based and secured by the mine operations, and a big purpose of it was to fund the mine operations. The reality is there was no trading platform. There was no insurance policy. It, interestingly enough, happened right in 2008. I was living in Las Vegas, and this insurance company was so said to be AIG. It only was so said to be AIG. The second AIG went down, and all of a sudden, oops, we couldn't get the insurance. I'm sorry, we lost everything. I was fortunately able to see this was a scam coming down the road. So with our clients, I did this noisy withdrawal. This is a scam. Don't do this. Walk away now. And if you choose to, it's your choice, but I'm walking away. And I sure did. And you know what? Same thing that keeps happened all over again. FBI gets involved. Turns out that this promoter did this for about $10 million, all of which went into his pocket. Also leaving people like my clients and the investors holding the bag of contributing millions of dollars. And ultimately, the clients that I had been working with at the time, they ultimately brought in $1 million after I say, no, don't run away because this is a horrible situation. I mean, it was a impressive scam because I remember having a meeting in one of the most well-known politicians in Las Vegas, for whatever that's worth, where they had pictures of them with President Reagan, President Clinton, President Bush, all over the wall, all these celebrity pictures. And this is where I was able to identify it as a scam and walked away immediately after. The promoter got in there and says, this is my mentor. He is the main guy, the key guy putting together this deal with me. And then as I was sitting there with the mine owners, my clients, the promoter, and this politician, it got to be really evident and very clear that they really didn't know each other. There was no relationship there. But the mine owner had in his thoughts, I'm going to make $3-4 million out of this just as a down payment. My clients were thinking, oh my God, we're going to make $5 million just by raising $1 million from investors. They had these twinkling lights of a too good to be true opportunity. It was literally within 24 hours of that meeting, I ran. Horrible situation. And sure enough, yep, they got scammed. The guy took the money and ran. I think they finally caught him in Mexico with his Ferraris, multiple. And of course, again, the FBI gets all my email communications. So they see everything that I was communicating. They see everything that I was saying was going on. And sure enough, it was so accurate that, again, I get to be brought in as a key witness to put this guy in prison. And he sure ended up there for a long, long time. So, you know, I really appreciate y'all being here today. If you do have more questions, throw them in chat. Would love for you to always join us for more. Reach out anytime. Contact information is a little QR code. You can also just go to this website, crowdfundinglawyers.net/thankyouCFO. But at the end of the day, please, please, pretty please protect yourself. Protect your investors. Always do good. Always try to lift people up. That's the only way that we keep this industry of making money to raising money, private investments, to be healthy, to be reliable. Whistleblow on scams that you see. Call out people. because we have to eradicate it for the protection of our investors, our business, the people of America. One last thing that I want to share, if you do have any of these situations going on, or if you need an attorney for any reason, just check out yourlawyersreferrals.com. They'll connect you with an attorney in the area, in the practice area, in the jurisdiction, in your backyard that you need to actually be able to help take care of you, support you. And at the end of the day, if you're finding yourself in a scam, an attorney is generally the first phone call, but the SEC, the state securities regulators, the police, and the FBI should be your next phone calls. The reality is the SEC and the FBI will not get involved unless they are multiple millions of dollars at stake and more than one person is complaining. The state is closer. They will take more action in terms of investigations. Police are generally worthless unless there's multiple people filing police reports. But at the end of the day, complain everywhere because we have to get rid of these scams because they happen. And here's a lot of the examples of how they work. So thank you all so much for joining. Truly appreciate you here today. Till next week, have a great one.